What's going on, everyone? I hope everyone had an amazing day. We're going to go over the indices, the crypto markets, and let's get right into it. So on the SPY, we are holding this 448.50 level, right? If that level does not hold, we will go and retest 447.11. Most likely is what's going to end up happening, right? So now today you can see that the MACD on the SPY is now getting much more oversold, which is a good sign, especially given the fact that we're staying above support. So staying above support while the MACD is going drastically down to the, becoming oversold, that is a very good signal. So we need to see how we respond around this 20 exponential moving average and then the prior all-time highs at 447.11 on the SPY. Okay, so this is a bullish setup. Essentially, we can see that this is just a minor pullback from a huge move, right? So if we go back to 447.11, or if we even fall back down to 445, that's still a bullish setup. These are just good opportunities to load back up into calls and going long, and it can potentially go on much higher. So there's that for the SPY, right? So now we can go ahead and check out the IWM. You can see that it looks, it's a huge rally, and we came back down to retest certain levels of support. So similar to what the SPY is basically trying to do. Note that the SPY's MACD looks, oversold, but the IWM's MACD does not look as oversold as the SPY, right? But we did come back down to retest this. We propelled much higher during the day, but then we closed much lower on the IWM, and we failed to close above 224.11, which is 224.09, which is a very important level of resistance and a Fibonacci level that we've been monitoring, right? So if this fails to continue going on higher, what is going to end up happening is we're going to fall back down to the 220.80 level and essentially fall back down to this green trend line here that we've been monitoring and that I mentioned yesterday, right? So we are oversold. The RSI not going lower is not a bullish sign. We want the RSI to go lower in unison with the MACD, right? But the fact that the RSI didn't go lower means that there's still potential downside momentum still remaining, okay? So we have to keep that in mind on the IWM. And if the IWM starts puking, then the SPY and the NASDAQ can potentially start, going down lower as well. So we just have to continue monitoring how that continues. Another good metric to see is how the dollar and the 10-year yield do. We'll get a better understanding of what may happen for the IWM, right? But for now, let's go ahead and check out the NASDAQ. All right, so the NASDAQ, right off the bat, you can see that it looks much stronger and more stable than the SPY and the IWM, right? And again, it looks very similar to what was going on back in April, right? We had a huge upward movement and then a few weeks of just chopping around in the middle. And during those few weeks, we became very, very, very oversold on the MACD. Right when everyone thought that we were going to skyrocket to new all-time highs, we broke down and fell drastically, okay? So now, moving forward to today, we need to see if that same pattern is going to play out once more. So now the MACD is not getting as oversold, clearly, as the SPY and the IWM, right? But we need to see, but we are beginning to basically chop around, right? So we need to see whether or not we can, how long essentially we want to chop around, and then whether or not we can really hold this very important support down here at 376.83, which is the lows. And then, just there's multiple layers of support down here. But the most important one is this low of this candle right here on August 30th. Okay, so we need to really just, we just got out of extremely overbought territory on the RSI as well. It's a good sign that the RSI is moving lower, and it's a good sign that the MACD is moving lower. And yeah, we just need to see how well we can hold this level of support And if that level breaks, we need to go down to the lower levels of support. But again, these can still potentially be bullish pullbacks. But regardless, you know, this looks very similar to what was going on back in April and May, right? So again, you know, the NASDAQ is going to key off of the dollar and the 30-year yield. So let's go ahead and check out what's going on in the 30-year yield. All right. So 30-year yield was extremely oversold. It bounced out of this oversold condition. I was saying that if we continued falling, then it would create a very, very detrimental situation for the NASDAQ. But what ended up happening was for the past 2 days, we bounced very heavily. We can see that the MACD of the 30-year yield is coming out of oversold, which is a very, very good sign. We bounced very, very dramatically, while the MACD barely even moved upward, right? So that is a very bullish sign. The RSI dramatically, sharply moved up as well. That's completely fine. So now we have to see if the 30-year yield can break above this 20 exponential moving average. If it can do that, then that will be extremely bullish, and that will be very beneficial to the NASDAQ, and we can potentially, you know, break up much higher. But again, we just need to see how well this movement sustains itself and, you know, how strong of a move this is, right? So again, if the 30-year yield and the dollar are both doing very well, then the NASDAQ is going to do well. And if the 10-year yield and the dollar are both doing very well, then the IWM will do well. Okay, so we just saw the 30-year yield. Let's go ahead and look at the dollar. So the dollar, it failed to cross above and close above the 20 exponential moving average, which is clearly acting as resistance currently. Okay, so we were also extremely oversold out of the dollar, very oversold on the MACD as well. Bounced higher, that's great, but now we're failing at the 20 exponential moving average, but the MACD is now overbought. Okay, so on the 30-year yield, you can remember that the MACD is still oversold. Yeah, we haven't gotten up to the 20 exponential moving average, right? But this being oversold means that there's still potential room to the upside for it to even cross above, right? Which is bullish, which means that we could potentially cross above on the above the 20 exponential moving average as well. But now when you look at the dollar, we've already crossed above, yet we failed to cross above resistance, which is a bearish sign. Okay, so we just need to continue monitoring what's going to happen with the dollar. And of course, now we can go ahead and take a look at the 10-year yield. So the 10-year yield clearly was doing much better than the 30-year yield recently, which is why the IWM was doing much better, right? So it was trading above the 20 exponential moving average, but the past 2 days, you know, we fell and closed down below the 20 exponential moving average. Whereas if you look at the past 2 days on the 30-year yield, we were going higher. The past 2 days on the 10-year yield, we've been falling. And it's basically, it's been acting as a very clean inverse currently, right? You can see that the MACD is essentially overbought, and we're overbought and we barely move downward, which means that there is a lot of potential room to the downside, which is not a bullish sign. This is very bearish. So we need to see how well we can work off of this overbought condition and whether or not we can sustain above levels of support while, you know, slowly working off this overbought, getting oversold, and hopefully trading above these levels here on the 10-year yield. Okay, so there's that for the overall indices. Now let's go ahead and take a look at the crypto markets. So this is a chart of Bitcoin. All right. And you have to think of the market as a rubber band, right? So when there is a huge stretch in one direction, right? What should usually happen, especially in the equities markets and the stock market, when we fall very sharply, shortly thereafter, we rally very sharply. But when this starts happening and we start consolidating close to the lows, this is not always a potentially good sign, okay? So with the crypto markets specifically, it doesn't always act you know, how the stock market acts. So when things look really, really bad, if we blindly cross above levels of resistance, then any sort of, you know, emotion or preconceived notion of what is supposed to happen in the crypto markets is thrown out the window. So essentially, if we cross above 47,500, which is the, you know, these intermittent highs and levels of resistance currently, right? If we cross above those levels, then nothing else truly really matters. So we need to see if we can cross above that level and sustain itself, okay? So that would be the best case for the crypto markets, because especially right now, the MACD is vomiting to the downside. It is almost as low as it's been in the past few months, right? The only time the MACD has been this low was back in June, when the price of Bitcoin made another vomit to the downside, okay? Back down here to, you know, what was 28,600, right? Which was the lowest it's been all year. So this looks potentially similar, but we need to see if we can sustain above these levels and break above this level of resistance. But, you know, it's not a good sign, especially since we have a huge wick to the downside. And of course, you know, I always mention that huge wicks to the downside and the upside on Bitcoin, they always get filled to at least 78%. So we can go ahead and look where that 78% number is going to be. And that is going to potentially be around 43,700. Okay, so you can see algorithmically we went and perfectly touched the 61.8% level, which is what happened yesterday, right? But what ends up happening is, you know, 50% or 61.8% usually always happens. That is a clear-cut thing that always happens. But 78% is also something that happens. And the fact that we haven't retested 78% is much more, you know, especially since we started making a green candle and people are starting to think that we're reversing. That is not a, this could potentially just be a fake out and create more chances for people to leverage their money and lose their money in this chop. Okay. So yeah, I mean, we just need to be patient and see whether or not these levels are going to sustain themselves. But again, one rule of thumb that you can always go back to is when Bitcoin makes a huge like candle, right? And then there's a huge downward wick. That wick always, the next day, right? There is always a retest to at least the 50% level of that wick. Period. If you look at every single instance in history of these large wicks, we come back and retest that 50% level of this entire wick, right? So in this instance, we also touch down to the 61% level of that wick. But what I'm saying is we will also most likely touch the 78% level of that wick. All right, so we need to see if we can remain above these levels of support. If not, most likely what's going to end up happening is this whole wick will be filled. And if this whole wick will be filled, right, then the next closest level of resist or support is going to be this green trend line here, which will be a very, very important level for Bitcoin to you know, that's when a very good potential buying opportunity is going to be for longer term. And it's going to be a very nice, clean pullback potentially to this very important level of support. And, and when we closed above this level of support back in June, this was a very good signal that we would continue the momentum upward. So the fact that we're coming back and retesting this level potentially would be a very good sign for the crypto markets. So there's my analysis on Bitcoin. Let's go ahead and take a look at Ethereum. So Ethereum looks very similar to whatever was happening with Bitcoin. You can see that the MACD is completely vomiting, right? And that is not always the best sign. So this is not the most bullish setup. in regards to the technical indicators on any of the crypto markets, right? But again, regardless of our feelings, regardless of any other indicators, regardless of anything else, if Ethereum closes above 35.68.47, that is going to be a very bullish scenario. And if we can hold above that level, then it can continue on higher. Okay. But until then, most likely what will end up happening is if Bitcoin does fall back down to these levels, then Ethereum will also fall back down to these levels. So, I mean, that's really it. Just be very safe, and just be patient. Okay. Just wait for direction, because right now there is no solid direction. It can really go 50-50 either way here. We're literally in the middle of, literally in the middle. We're at 3,400. It fell down to 3,000, and we were just at 4,000. So this is literally the middle. It doesn't give a really good buy opportunity. There's no good risk reward. Potentially if we were to fall down to 3,100, you would set a stop to anything below 3,000, but then your upward target would be 4,000. So that's a 9-to-1 reward to risk ratio. That would be a much better trade. Whereas right now, you're basically getting 1-to-1 odds. You're literally right in the middle. Does not make sense to trade this. It only makes sense to hold long term. But of course, I'm not your financial advisor. This is not financial advice. But, I told all of my friends and family to buy Bitcoin. And I was monitoring it, told them to buy it back right here. I told them to buy it right here. And I made a huge 9-page Google document explaining why they should. And this is, here we are. Anyway, I hope you guys enjoyed the video. I will see you guys tomorrow. Have an amazing day.